From the 21st of December, Tesla will be included on the world-famous S&P 500. Tesla won't just be included on the index, but will be the largest ever new company to join the big boys. Amazingly, Tesla with its $400 billion market cap size will join the index within the top 5% of all companies listed. The Standard & Poor's Dow Jones indices, bit of a mouthful, but those are the guys who own the S&P 500. They've estimated Tesla will account for about 1% of the entire index, which means roughly, and it's a lot of money, roughly $51 billion of assets will have to be sold by each and every firm who provide investors with S&P 500 funds. So Vanguard, Fidelity and iShares, they are going to have to redistribute their allocation of pretty much all of the index in order to accommodate Tesla. This reallocation of assets is required to properly track the S&P 500 index so that Tesla makes up that 1%. It's quite possible that such a huge amount of trading will cause short-term disruption in the market, but what about long-term disruption? Well, there are many people who believe Tesla's stock price is in a bubble anyway, so if this bubble continues to grow, we could be in for some interesting downturns in the future. This bubble is often considered, or sometimes comparable to the bubble that Yahoo had when they joined the S&P 500 in December of 1999. That was obviously just before the dot-com bubble burst. If we assume that Tesla's stock price is in a bubble, what does that actually mean for you and I? Well, if you're invested into the S&P 500, whether it's an ETF or index fund, around 1% of your investment is about to be reallocated to Tesla. So if you don't believe in the company or you think they're overinflated, you have to take this into consideration, because whether you like it or not, your index fund investments or your ETF investments are going to be updated. This means that most fund managers will likely sell stocks of medium and small cap companies, but you may notice holdings of Apple or even Amazon will fall slightly. So if you do believe that Tesla's in a bubble, and that bubble will eventually burst, this might cause you a little bit of concern, because you are now going to be invested in them. And like I said, you don't really have a choice in this. In the short term, my prediction is that this reallocation in favor of Tesla is going to cause a small market rally. And considering that we've just had two market rallies, one after the US election and another one after Pfizer's vaccine announcement, a third significant rally in such a short amount of time is probably not a good thing for the market as a whole, simply because it has fed at a fall, and these rallies are quite speculative in nature. My medium-term prediction then is that after the rally that we're seeing now with the US election and with Pfizer, and the rally that will happen once Tesla joins, I would really expect that after a month or two, the stock prices and the index itself will reach a new normal and stabilize. The stabilization may take a few weeks, it could take a few months, I do think that's more likely. So the prediction is that if you're wanting to profit from this activity and this incoming rally, you need to buy into Tesla or buy into the index before Tesla is actually officially added. The long-term impact then is very hard to predict. The reality is that nobody knows what is going to happen. Personally, I do believe that Tesla's stock price is overvalued, but who's to say that it won't continue to rise for many years even until it's actually brought down by a stock market-wide crash. If you believe in things like price-to-earnings ratios, if you think they're a useful metric, you'll be quite shocked to understand that Tesla have a trailing PE ratio of over 900 and a forward-looking PE ratio of over 120, both of which are quite insane numbers and do strongly indicate an overvaluation. If we just park the metrics for a second, let's just consider Tesla as a business. They sell vehicles, but their most valuable breakthroughs far and wide are in the technology space. They've got an enigmatic alien or leader from Mars, and like the company itself, Elon has a cult following. The enthusiasm for Tesla is well founded. I mean, personally, I do think they are really contributing to sustainable development of our planet, and they're doing that by forcing the hand of all car manufacturers down the route of EV vehicles. Before that train departs, before they get left behind, these traditional car manufacturers have to kind of follow Tesla. Having said all of that, I do think it's strange that Tesla are, by a long mile, and this can't be understated, they are the most valuable auto company in the world, despite the fact that they only produce a fraction of the vehicles of companies that have been long established like Volkswagen or Toyota. Nevertheless, the age of electric vehicles is upon us, and governments around the world are mandating new standards which are going to send the internal combustion engine to the fiery depths that it was born from. The UK, for example, has brought forward its plans to ban the sale of new diesel or petrol-powered cars by 2030, so 10 years away, no more new sales of those type of vehicles. Every new car sold is going to need to be an EV. So the question is, should you buy Tesla now? Personally, I'll be letting my index fund investments purchase Tesla for me. I won't be chasing the individual stock myself. Like I said, because I believe they're overvalued, I think it would be a bit hypocritical to then go and invest directly in the stock. I'd rather do that through the index funds that I'm tracking. Having said all this, Tesla really is an abnormal business. They are not a typical organization, and they are an innovator and one of the leading innovators across the globe in reality. They are at the cutting edge of things like battery technology, and their information and their data behind self-driving cars is above everyone else's. I would say it's even above Google's understanding of this technology area. Honestly, I think that's where the value of Tesla comes from, the value of the battery knowledge and also the self-driving car knowledge. That's where the power of that company comes from. So perhaps I'll regret not buying in now when in 20 years there are battery-powered overloads. That's all from me today. Thanks for watching Money Champ. Don't forget to click subscribe.